Now, my case is not caught by any of the things. My asset still remains there. So there is no provision to exclude that asset from WDV. So the asset remains part of WDV, and it remains part of WDV. Then when I sell it, Section 50C should be made applicable. And of course, we have got some judgments also. 8793 Chabri Act judgment. 8793 181, when the special measure stated yes, even though you might not have claimed on when given depreciation for almost 2 years, the section 50 is applicable. I am aware of one decision, I am not getting the name of it, Bombay Tribunal, where it was mentioned, where it was held, that once I stop using an asset for my business purpose and I use for my personal purpose or account, then that asset goes out of the block of asset. So when after 7-8 years I sell the asset, it will be a long-term capital asset. But after the Chabri Act judgment, I think with difficult proposition to content. Then the next question is, though in first case is that asset cannot say that Section 50 should not be made applicable just because I stopped using the asset long 5-6 years back. The question is whether Section 50, assuming it is part of block of asset, Section 50 in this case gets triggered. Now see, very important fact which perhaps I missed out is that my sale value is less than the WDV. So Section 50 does not come into play. The next question is, if Section 50 does not come into play, whether Section 50C can be made applicable. In other words, if I have sold a business asset which is part of my block and sale value is less than WDV, so I don't go to Section 50, but still Section 50C can be made applicable. Now, very interesting issue arises. Actually, 50C applies only when land and building is sold and it replaces Section 40 and 49, that is consideration. Now, here when you compute WDV, when you compute your depreciation in a year for which a part of asset has been sold, you go to 43 subsection 6. There is opening WDV, let's say 100 rupees, let's sell of one asset, let's say 25 rupees. So my WDV continues 75 on which I get depreciation. So the entire mechanism is provided in Section 43(6). You don't need to go to Section 48 or 49. Now as mentioned by the Bombay High Court, in builders and many other cases, that fiction of Section 50C is only for purpose of 40 and 49. So in some type of cases, 50C according to me cannot be made applicable when there is no Section 50 involved, but there is a sale of individual property within the block of assets. Now the second issue is, assuming Section 50 applies, 50C applies, that means my sale value has to be enhanced. Now in this case, where as I said, my opening WDV is 100, sale is of 25 rupees, and my WDV is 75 rupees, no Section 50. But assuming let's say 50C applies, and the 50C valuation is 120 rupees, or so my sale will be 145. In that case, my sale will be more than WDV, then Section 50 will get triggered. Now, of course, there are judgments. Now, assuming Section 50 applies, then of course we have got judgments of Special Bench United Marine that yes, 50C applies to Section 50 also. There was argument, a counter-argument that look, Section 50 itself is a dimming fictional provision. How can you apply another dimming fictional provision, Section 50C into that? But right here only that's a separate decision. But I am just asking one thing, very interesting issue for consideration. How can you interpret such? How can you have such interpretation? Let's say, as I said, mentioned, if my sale consideration is, let's say, out of opening W is 100 rupees. If my sale consideration is 99, so the block exists. So there is a 1 rupee is my closing WDV. So there is no Section 50 and there is no Section 50C at all. But if my sale consideration is increased by rupees 2 only, 101. Then what happens? My sale value is more than WDV. Section 50 gets triggered. If Section 50 gets triggered, then 50C also gets triggered. Can we have such interpretation where just because there is a difference in sale value, in one case there is no Section 50C, I am taxed on the actual sale value. In another case, I am taxed at limit stamp duty value. This is just an issue to be considered. Then the issue comes of set-off. Again, very interesting issue. A short-term capital gain is what? Today, I have purchased an asset for ₹1,000. Over the years, I have claimed depreciation of ₹900. Today, my WDV is, let's say, 100. Now, I am selling the asset for, let's say, 1,100 rupees. So, I am paying 1,000 rupees as my short-term capital gain. Now, what I am saying is, look, I have got brought for business loss of let's say more than 1,000 rupees, so at least allow me set off. Why? Because you see the character of the short-term capital gain, though it is taxed as the short-term capital gain, but the real characteristics of this income is nothing but a business income. And this is based on, of course, very well Supreme Court confunded, and there are many other confunded judgments in a United Commercial Bank, many judgments are there, that for Section 72, what you can claim set off. Now, the scheme is that if you have the business loss, it can be set off against business income of subsequent year. Now, Section 70 is not talking that business income computed under that business profit of business. So, I have a business loss, I can set off against any business income, even though it might not have been taxed under that particular head. The classic example, of course, is one of the latest decisions is lavish apartment. There is a Delhi High Court judgment where the SSC has shown income in a business of hire, and SSC has given hire its property and some equipment, and the income was taxed under house property and other sources. But SSC has got business loss, unabsorbed business loss, and it sought to set off this to income against the losses. Departure you cannot do it because the income is not being computed by business income. The High Court said nothing doing. Maybe the incomes are taxed on other heads, other than business income, but see the real characteristics of the income. They are nothing but a business income, part of the business of the SSC, and the High Court has allowed set off. Can you extend the logic for such a thing? Look, maybe my short-term capital gain is taxed Section 50, but the characteristic is what? It's a business income. Or alternatively, at least to the extent of depreciation component of such income. Because I have been claiming deduction of depreciation of let's say rupees 900 for all the years. Today, it is nothing but recoupment. When I am selling at higher price, I am recouping part of the business expenditure which I had been allowed. So, it's nothing but a part of business income. So, at least to the extent of depreciation, which has been allowed all these years, you allow me set off. Of course, the reliance has been played by the SSC on JK Chemical, very old decisions, and there are a couple of Bombay Tribunal decisions of late, legal electronic and Shri Padmavati. I must say it should not be found out. Of course, department relies upon the Nandi Steel judgment special bench, but respect the Nandi Steel was a totally different fact where the subject matter of sale was a land, not a depreciable asset. So the issue was, though in that case, Bombay Tribunal tried to overcome this argument of SSC, but that land was not a depreciable item, so according to me, that judgment should not be made applicable. Of course, legality of such contingent should be evaluated or the decision, but at least personally I think to the extent of depreciation which has been already availed by me, to that extent at least the set-off should be allowed. With this point, I go to other issue, rate. Of course, for rate of taxation there is no dispute about there are decisions of many decisions that rate, even though you are taxing a short-term capital gain, you are not amended Section 112. Section 50 applies only to 48, 49, and then your rate will be the long-term capital rate. Smita conductors and Manal investment are two decisions, 152 ITD 417. Indexation, of course, indexation is not be applicable because once when Section 50 overrides 48, 49, including indexation benefits. So, the Section 50 is complete code of computation for depreciable asset for computation. That is why one of the arguments made in the morning session is that Section 50 is complete code for computation. Nothing beyond that. It stops there. You apply rate of taxation after computation. That has not been extended to. So fine, that is fine. Case number 1. Case number 2 is regarding reassessment. I think issues are fairly straight. As far as the first issue is sanction is concerned, the department argued today that it's a confidential document. According to me, it's not, because giving sanction, according sanction is a judicial, it's a very fundamental aspect of reassessment, from the important judicial requirement. If that is so, SSC has got right to ask to get inspection and have a copy of that sanction. In fact, as my experience shows that is available, the department is giving that copy of that. Only thing is, yes, there are many decisions on the account. In fact, the Bombay High Court judgment also directed this point, judgment remedies 287 ITR 484, that while according sanction, commission is supposed to apply its mind. It It cannot be mechanical. So I think that issue is well settled, that just by writing endorse or I am satisfied or yes, okay, satisfied, no, that cannot be meet the requirement. The second issue is regarding the proviso. Whether proviso applies in this case. Now friends, there are two things. One is explanation. One, which is a exception to proviso. Now see the requirement. Very interestingly, what is the requirement of proviso? That if there is an earlier assessment frame and assessment is reassessment being made after 4 years, then you cannot do it, department cannot do it, provided that the SSC, there is a failure on the part of the SSC to disclose fully and truly all material facts necessary for the assessment. Now, please underline the word material fact necessary for the assessment. It is not saying income, that he has failed to disclose fully his income. No. So that's what the department is trying to say in this case. Look, you have failed to discuss proper income because some item is missed out or decoding it. No. My job or my responsibility as an SSC is to disclose fluently all material facts for my assessment. What interpretation has to be taken, that assessing officer has to take interpretation out of that. It is not my job to tell him what interpretation you have to take about decoding or you take this entry or not entry. So, and that too is a failure of the SSC, not failure of assessing officer. And of course, the department counsel cited judgment that no failure of assessing officer also can be subject matter of reassessment. But there are many judgments, including Momiako judgment, that this proviso contemplates failure of the SSC. If assessing officer has failed to do something, if assessing officer had before him some material from which he could have found out that income and escape, but he still made the assessment, at the most it is the failure of the assessing officer for which you cannot consider proviso. Now, expansion one very interesting issue arises, that expansion one is exception, that some assumption is that just because you are producing books of accounts and material, and from where with due diligence the assessing officer could have discovered the income, that cannot be the argument available to the SSC. Here is in this case at least, I did not go to larger issue because we don't have time. And in this case, it is not a document which I have produced. It is a document which is with the department, which is sealed by the assessing officer, and the department is relying upon that document to assess my useful income. So whether expansion one at all applies to me. Anyway, the larger issue is assuming it is my, I have produced, then again depend on facts of each case, whether how much voluminous material I have produced and what, then become facts of each case. And then from facts of this case, I think department cannot have recourse to explanation one. Now, of course, once you say proviso applies, then I don't need to go to the other Shionam and Kelvinator and change of opinion, all these things. Only one small thing is that here the allegation department is that the assessing officer has failed to notice certain entries. That is a very crucial observation. It may have some nuisance value for the SSC to define, but again, since it is proviso, then of course you can say, assuming there is a failure of the part of the assessing officer, it is not my fault. But suppose it would have been, reassessment would have been done within 4 years, then maybe it will be a debatable issue. I am not saying sure, but maybe it will be an issue on that. Last thing is about an appeal. Now this is a very interesting issue, which I think a third proviso has been applied. That if you have filed an appeal, then you can, if that subject matter of that in appeal, then you cannot issue 147. Now friends, very interestingly, here the wording used on the third proviso is that assessing officer may reassess income other than income involving matters which are the subject matter of the appeal, which is chargeable to tax and escape. So, as long as my issue, this issue of income, unusual income is subject to appeal for the CIT appeal period, assessing officer cannot issue 147. Contrast this with section 263, where I said no, it is not only subject to appeal, but it should be decided and considered by CIT, by the I am seeing the language, different language of 263, where 263 assessing or CIT can exercise power of 263 on any matter, even if SSC has filed an appeal. But there, the only bar is, if SSC has filed an appeal on certain point, CIT, even though you have filed an appeal, there is no bar on CIT to revise that particular aspect. The only bar is that that issue has been decided and considered by CIT appeal. That has to be ordered by CIT appeal. Then only CIT is debarred. Here it is the language of 147. Just because you file an appeal, that whether CIT appear decided the matter or not, there is a bar of the part of the assessing officer issue 147. I think that's the issue which requires to be highlighted. With this, I go to question number 3 on 263. There are two issues. First of all, technical issue, whether amendment section 60 is retrospective or not. Even though there is a Calcutta arbitration, but we have got a couple of Mumbai tribunal decisions, the effect that no, it is not retrospective. Obviously, my personal view is obviously no, because it changes the burden, section 68. And my attention being drawn by one of the Ketan, there is a Bombay High Court judgment on green infrastructure. But as I understand, I think, as I am told, that in that case, Bombay High Court only stated that you cannot apply 68 in the matter of premium. So there is no, the Bombay High Court has not decisively held that whether 68 is retrospective or not, but you can get support from this judgment on this point. Now, here, so I think 68 is not retrospective now. Now, whether amendment is into 63 exception 2 is retrospective or not, here also fortunately we have got a couple of judgments. Some of the judgments have been, I think, mentioned, but one judgment is Ahmedabad Tribunal, Jayant Murthy, which is unreported as I understand, Ahmedabad, where after considering prompt griefs, it has been held that no 263 exception 2 is not retrospective. So I think fairly so, of course, again debatable issue whether it is ruled or doubt or to clarify the position, but as well today, I think we can go on the basis that it is not retrospective. Now, with this, if you evaluate this question, let's get a URD, unregistered is an issue, first issue, purchase. Now, issue is record. What is record? Yes, well, it has been mentioned by the Department of DR today. The record is anything which is coming to knowledge of CIT when it is examining the records. So, post-assessment material can also be part of record for the CIT to issue 263 notice. That is point well taken. Of course, issue is whether we can take cognizance of any material which is after issue show code notice. I think we will not go to that issue because that is not a fact here. Now, but important thing is, the erroneous, when you say order is erroneous as on what date? Let's say, assuming this case, the material, the hawala, whatever his registration was cancelled afterwards, after the assessment order was passed. Can you grant an order erroneous because of post-assessment development? So when the assessment officer passed the order, what was the material before him? Was there any adverse material before him? No. Preliminary owners were discharged by the SSC? Yes. Now, do you evaluate erroneousness of the judgment, keeping in mind the situation at the date of the assessment order? You can draw parallel from section 154, where we have got many judgments say that look, when the assessment order passed, there was some issue which is in favor of the SSC, and assessing officer allowed that claim. Subsequently, even there is an amendment, retrospective amendment, or even Supreme Court reversed that view. But still, you cannot grant that assessment order as mistake appearing from record, because at that point of time when the assessing officer passed the order, that Supreme Court judgment was not there, so there was nothing wrong when he passed the order. Maybe subsequent Supreme Court reversed the issue. Whether we can draw this analogy in 263 also, that when assessing officer passed 263 order, all the developments were not there, assuming the material which is with the CIT has no prospective effect, in a very loose sense to say. It is a development which took place afterwards. The third issue is regarding no inquiry, lack of, I think we not go to all the issues. We have plenty of judgment, Bombay High Court and Delhi High Court, and that there is recently lack of no inquiry, 263 applied before amendment, only when there was no inquiry. So if there was some inquiry by the AO, it should be no 263, but I think you should not take the proposition as a gospel truth. Again, depends on facts of each case, even before amendment. If assuming 263 amendment is not applicable, even prior to amendment, yes, bond is well taken in favor of the assessing, but not in every case where on the stark facts on the assessment order, the assessing officer should have made further inquiry, but he failed to do so. So just because he had made some inquiry, you cannot take support of all the judgments, so it will depend on facts of each case. Again, the issue is whether commissioner can give specific direction. There are certain judgments that effect. In some type of cases where the allegation is that you have not made proper inquiry, the proper code for the CIT would have been to restore the matter to the assessing officer to make further inquiry and pass order in accordance with the law. You cannot direct AO to make additions. So that again, lacuna which assessing can challenge in this. Again, share premium, again, I think I will not again repeat the same thing, 68 is not retrospective. In the given facts of facts, what are the before the assessing officer? Only thing, I must, the one latest Supreme Court judgment, Raj Mandir Estate, which now Supreme Court has affirmed, 2017 Taxation 85, where on the similar fact, the revision order was passed, and ultimately Supreme Court said, and the Delhi High Court has said, yes, revision is proper, and Supreme Court has dismissed, ultimately saying we don't think it is fit for interference. So in a way, department said it is Supreme Court has affirmed our stand. But again, as I said, facts of each case we are to go into. How much time we have, Jay? 15. With this, I have a very interesting issue of 4. Accrual of income. I think facts are already known to you, so I will not repeat the facts. The issue is relevance of issue is accrual. Now for accrual there are many concepts. One is whether accrual depends upon entries in books of account. Entries or absence of entries in books of account for either me or the counterparty. Because here one of the issue is that the counterparty has debited interest expenditure and I am not accepting or I am not passing entry for credit. Can it be binding on me? Answer is no. Just because counterparty has passed entry for debit, I am on principle, then facts will come later on. Or even otherwise, assuming I don't pass, reverse way also, assuming I don't pass an entry, that is not conclusive. If income is accrued, it is accrued. Just because I have not passed the entry, it will not stop accrual. So entry in books of account may not be relevant. Issue is, you have to see the what's the entry is the concept of accrual. Now of course, accrual, everybody knows. Right, accrual means right to receive. Right to receive. When I get the right to receive. Here in this case, it has been argued by the department. Look, there is a right to receive interest income. Yes, fine. But this concept of right of accrual or right to receive is gospel sacrilege? Answer is no. Because there is one more interesting issue is real income here. Assuming you have a right to receive income from somebody, but taking into account the commercial circumstances, realities, ground reality, you are not going to receive that income at all. Then Supreme Court has also stated real income theory applies. You have to see the accrual concept in the context of real income theory as well. Let's say for example in Mundra electricity case, what had happened? The electricity company had a right to charge extra electricity from the consumer. In fact, electricity company had issued bills for enhanced electricity payment. But there was a UN crash, the consumer said, no, it is higher. Ultimately, some political intervention, whatever, the ultimately company decided to commercial reality said, I am not able to recover this money. And the Supreme Court said, yes, don't do it. You are following mercantile, yes, right, you issued bill, you have a right to recover electricity. But keeping in mind the reality, ground reality, income had not accrued. And this principle was followed in Bokar. Very interesting in Bokar also. Bokar also, it was some interest income was there. SSC has passed entry of interest income. In next year, there was some reverse of the entry. Because next year, now I think the transaction, we are catching a transaction. So the next year they pass the reverse of the entry. Next year they pass the reverse of the entry based on some resolution. Now, unfortunately, the judgment did not mention the date of resolution, but there is a resolution that will the entire arrangement between me and my lessee is to be reversed, and the reverse entry subsequent to it. And Supreme Court following the Mudra says no, income has